Well, good morning, everyone. Good morning. Happy Monday morning. It is December 9th, 2024. It is so good to see you all this beautiful, amazing Monday morning. I hope you are doing well. I hope you're having a absolutely amazing day this morning. It is good to be here. I am looking forward to going over all that's going on in the market, looking over the leading market indicators, lagging market indicators, doing a complete market overview here in our amazing Austin market. Excited to see what's happening here in December. I hope you all had an absolutely amazing weekend. I want to remind you, we've got our mentorship meeting tomorrow, 10 a.m. We are doing that tomorrow, 10 a.m. here at the office. We do have our Wednesday broker Q&A, contract review and training. And then we have our Friday meeting. So be sure to join us for our Friday meeting. We didn't have a Friday meeting this past Friday. I was in Chicago. Got home at 3 a.m. So it is good to be back. Very good to be back. Y'all, we're going to go ahead and hit it hard. If you have any questions, please use this as an opportunity to ask any questions that you may have. Really important week when it comes to rates. We're going to go over the economic calendar, but let's go ahead and start by updating our famous and ever trustworthy new listing to pending ratio, best leading market indicator available for the entire area. So let's go ahead and just really hit it hard. We're going to start by updating the number of open house offerings from the 2nd all the way through the 9th, and we are looking at a total of 1,986 open houses were offered over the past 7 days. Of course, more than the previous week because it was Thanksgiving. 1986. There we have 1986. There we have it. 1,986 open house opportunities. As you know, we're going to go backwards in time a little bit and we're going to update the previous few weeks because we know that agents are really bad when it comes to updating properties that went pending. So we're going to go back to November 25th all the way through December 2nd, and we're going to take a look at pending. Keep in mind, this is going to be for the 6-county area. That's going to be Travis, Williamson, Bastrop, Hayes, Caldwell, along with Burnett counties. And this number is going to go up from 330, which was already at a 1.11 new listing to pending ratio. Now, of course, that's because it was Thanksgiving week, but we're going to be able to increase this number to a very encouraging 357. That's going to give us a 1.16 ratio. Now, what was that ratio like Thanksgiving of last year? Thanksgiving of last year, when did Thanksgiving fall on? It was right here, 11/20 through 11/27. That was 1.15. And you all, we beat last year. A higher ratio this year compared to last year. I don't remember last time we had a higher ratio this year compared to last year. Way better fourth quarter this year compared to last year. Really encouraging to see what's happening with fourth quarter real estate here in Austin. Prices going up. We had a price increase for the month of October. On the median side of things, prices going up. So really encouraging. And now we see that the leading indicator, demand, up 1.16. Let's update the previous week. That's going to be from the 18th all the way through the 25th. That's going to bring us to 460. That ratio goes up to 1.04. Really quick reminder, when you have a ratio over 1, that means that more properties went under contract that came on the market. We take everything that's new on the market, everything that's back on the market. We divide that by everything that went active under contract plus pending. That's going to give us that ratio. A ratio under 1 means that you had more properties come on the market that were absorbed by the market. A ratio over 1 means you had more properties get absorbed by the market in relation to properties that came on the market. So the higher the number, the hotter the market, the higher the demand for real estate within the market. That's what's going on. So when we see that ratio over 1, Well, that means that inventory goes down. Now we're going to bring this up to 442. Let's keep on going, keep on updating. We're going to go from the 4th until the 11th. That's going to be 415. Let's keep on going. We're going to go from the 28th all the way through the 4th. That's going to be 455. We've got a few stragglers here where agents are updating the information. From the 21st to the 28th, that's going to be 438. Let's keep on going. From the 14th all the way through the 21st, that's going to be 443. It's just those tiny little stragglers. 7 through the 14th, 473. We no longer have to update. The new low number contributes to that as well. Did you already talk about that? I had to restart my laptop, so I missed a few. The new low number contributes to that as well. The new low number on what? You're talking about listings?
Yeah, the new listings coming on the market contributes to it being over one as well, correct?
Yeah, absolutely. That's exactly it. So yeah, we looked at, but here's what we did mention. So yeah, the reason why this number is so high is because we had less new listings come on the market because of the holidays, but when you compare it year over year, it is a higher new listing to pending ratio this year compared to last year. But that's a very good point. Yeah, we were expecting a ratio over 1 simply because we only had 453 new listings come on the market. I mean, just keep in mind, you all, this is a metropolitan area of, I mean, how many people are in the Austin MSA? Population, Austin MSA. You're looking at 2.4 million people in an MSA and 453 listings come on the market. That's ridiculous. That's an insanely low number. And hence why that new listing to pending ratio went up. So there you have it. And yeah, demand is up. And you bring up a very good point. Well, look what happened with rates. Rates peaked at 6.84. This is going to be the weekly rate from Fannie Mae. Thankfully, on our side, we were a little bit better than this. We never got up to the 6.875. We were closer to the 6.625. But look at it right now, 6.69 for the previous week. But when you look at Robert's rate sheet, which if you're not receiving Robert's rate sheet, reach out to him. Super important that you know exactly what's going on with rates. But we also review that information. And the good news from Robert is that we're at 6.5. 6.5, conventional 30 years, 6.5. Really exciting to see that number at 6.5. FHA, I was convinced that we were going to go under 6%. I was hoping for a 5.999. We're exactly 6%, but that's okay. This is a really important week when it comes to rates. We're going to review that here in the next few minutes. But let us go ahead and start taking a look at the number of new listings from the 2nd all the way through the 9th. And we are at, still not a huge number. We are at 723. 723 new listings. Let's take a look at price increase. We're at 174. That's a high number. Very interesting. Probably builders going back saying we had a really good October, a really good November. Let's end the year more of an aggressive note. Let's start doing some price increases. Let's take a look at price decrease. We're at $12.99. That's going to give us that 88% best percentage going all the way back here to the end of October. We knew that was going to happen. Builders really increased the price towards the end of October, but we are now seeing a little bit of an increase on the number of price increases towards the beginning part of the month, something that we usually don't see. Let's take a look at back on the market. Hopefully that's going to be a fairly low number. Yeah, 19%. That is a low number. Let's take a look at active under contract. Deals are being held together right now. One is that the buyer doesn't want to give up the rate that they locked in, and sellers are willing to offer concessions. So we're able to hold on to deals in this market. Sellers do not want that listing back on the market, and buyers don't want to give up that rate. Active under contract, we're at 335. Wow. Excellent number going into Monday. This is where you get to guess. I need 5 people to guess, 5 guesses. How many pending? What are your thoughts on the number of pending? Let's go ahead and get 5 guesses going. And I will wait for 5 people to go. Okay, we've got Harold is starting us off at 250. 1 down, 4 to go. We've got 202, Seth, coming in. Melanie at a very much bullish 272. We've got 3 down, 2 to go. Let's get 2 more people to guess the number of pending properties. 250, 202, 272. Let's get 2 more people. Grab your finger, find your number key. Okay, we've got Rowan coming in at 261. 1 left. I need 1 more person to go ahead and give us a guess. 1 more person. Okay, we've got Brianna at a very bullish 287. Let's take a look at this number. We are at, oh, wow, you all, this is encouraging. 254. Not a bad way to start the week. 335 active under contract, 254 pending. We are starting the day at a 0.68 ratio. When we revisit this number over the next few weeks, we're going to end up right around here, 0.84, 0.88, 0.85. That's where we're going to end up. So really encouraging, a good way to start the month of December. Demand is sustained, and this is great. Not bad for us to start the first week of December with a 0.68. Let's take a look at let's do the monthly right now. And first thing we're going to have to do is we're going to have to go backwards in time for the month of November. Take a look at the number of pending. This 1441 is going to go up to 1478. That's going to give us a 0.91 ratio. For the month of November, look at the ratio November 2023, 0.82. That is substantially different. That is a significant improvement. Way better November of this year compared to November of last year. Really encouraging to see a 0.91 ratio for the month of November. Let's go back and do October. Number of pending in October, that's going to be 1699. So we've got 3 additional ones. That's not going to change the ratio. Do we have to change anything for the month of September? That's going to be 1839. We do 1839. That's not going to change anything. What about August? Do we have any updates for August? 1863. Nothing changes for the month of August. Now we can start updating the month of December. Number of new listings so far for the first 9 days in December, 749. Let's take a look at number of price increases, 175. Price decrease, we are at 1365. That's going to give us 89%. Oh, interesting. Slightly more than November. Was not expecting that. December of last year, we had 84%. We're at 89% right now. So this is a slightly higher number than I would have expected. Let's take a look at back on the market. We're at 151. 20% back on the market, right in line. When you take a look at the average for the entire year, it's 19%. We're at 20%, not bad. Active under contract so far, 355. And let's take a look at pending so far. We're at 294. So 0.72, not bad. So we had a 1.08 December of last year. This is what's going to happen. This 0.72 is going to shoot up, and it's going to land over 1. And the reason why, it's December 9th right now. When do people stop putting their homes on the market because of Christmas? Right around that 15th to the 18th. My cutoff is really the 15th. If we can't put the home on the market by the 15th, let's write it out. Let's put it on the 5th of January. We can push it towards the 18th, 19th. You don't want to put anything on the market 5 days before Christmas. Are there situations where you would want to do that? Vacant home, well staged, very much area specific, low inventory. But for the most part, we just want to pause between the 18th of December all the way through January 5th. Get through the holiday season. That's going to contribute to a very high new listing to pending ratio because properties are going to go under contract. If you look at the past 25 Decembers, go all the way back to the year 2000, we've got out of the 25 Decembers, 21 out of 25, we had a higher number of sold in December, higher number of under contract in December compared to November. Now, we did have a really good November. So could this December be added to one where we have less properties going under contract this December? Because this past November was fantastic. But properties that went under contract in November are going to close in December. So we're going to have more properties close this December compared to November simply because of the properties that went under contract November of this year. Let's take a look at sold so far this month. We are at 586 sold. What about withdrawn? We're at 295. A slightly higher number, 295. That's a high number of withdrawn, and expired 142. So that's the update for the entire month. Let's take a look at the comparison. So we've got, and let's only focus right here. Let's focus on the month of November. We have 77 less new properties came on the market November 2024 compared to November of 2023. That's a 2.8% drop. 110 more price increases, 114 less price drops, 85 less back on the market. This confirms what we just said. Deals are being held together. 231 more active under contract, 48 less pending. We're going to make up that 48 because you just saw agents are really bad when it comes to updating pending. We're going to make up that 48. Between now and the end of the month, we're going to make that up. It's going to be single digit, but we are already 6.6% more properties went under contract November 2024 compared to November 2023. And look at the past 3 months, 11.8, 9.4, 6.6. Of course, ignore the 76. We're only December 9th. Just completely ignore December. But this is really encouraging. If I ignore December, we have 11 more properties sold this year compared to last year. Under contract, we have, let's take a look at it. No, so not 11. 11 is going to be, so it's not going to be 11. It's going to be 37 negative. 37 less properties sold. So if you add all of these, it's going to be 37. 37 less properties sold January through the end of November 2024 compared to 2023. But when you look at properties that are pending, we have on the plus side 416. What does that tell us? We're going to have a killer December. December solds are going to be on the positive side. I would even go as far as saying it's going to be on the positive side, double-digit percentage. Because last December, we had a drop. Because we had a pretty decent drop on the number of pending properties for August, September, in single-digit pending year over year for October, November, and December. This time around, look at the difference. 11.8, 9.4. November, 6.6. This was 8.6 for December, but look at that. We were down. September, we were down on the number of pending 4.5 year over year. September of this year, we're up 11.8% on pending. So we've had a really good fourth quarter, amazing fourth quarter. That's going to translate into a incredible number of sold properties for the month of December. Just by reviewing your commission disbursement request, I'm very encouraged, really encouraged with how this month and this quarter is ending. Any questions, you all? As you know, I'm going to print all this information as a PDF. You're going to have this. I'm going to email it to everyone when I do my recap from this meeting. But what are you all noticing out there? Are y'all noticing this increase in demand, increase in activity? Probably some of the really desirable areas, hearing that word multiple offers. I know that some of our listings, we were prepping the seller. It might take a while. We might be in the market 50, 60 days, and then we just get an offer within the first 7 days. Better to take that direction, rely on data. But keep in mind, number of sold or median sold days or average sold days, those are all lagging indicators. And then even on the average days on the market, that can be a very deceptive number because you've got 50% of the properties that are overpriced, they don't look good, terrible marketing, terrible staging, and it's going to drive the average and the median days on the market really high. And then your listing comes in, it's priced right, it looks good, it smells good, it feels good, and then you're going to get that sold within first 5 days. Well, that's because the entire rest of the market has been rejected. So, but better to prepare your client for what may happen and then just have your client blown away with the job that you've done marketing, listing the property. So I'm really encouraged. Hopefully y'all are seeing the same stuff. If anyone wants to share what you are personally experiencing out there, feel free to chime in. Feel free to unmute yourself or send a chat. We would love to hear from you. Let's take a look, you all, the bond market economic calendar. Let's see what's going on here. This is going to be a very important week when it comes to the entire bond market. Let's take a look at the economic calendar. We've got employment index, a little bit better than the previous. That's really good. We've got 2 auctions going on here in the next few minutes, in the next 6 minutes. We've got a 3-month and we've got a 6-month auction that is about to happen. We also have tomorrow's small business optimism. Very important. We've got productivity. We've got labor costs. This is going to be really big. This is inflationary. They're expecting an increase of 1.9%. The previous year was 0.4, so they're expecting some pressure when it comes to unit labor cost. And then going into Wednesday, this is going to be the really big day because we've got the famous CPI, Consumer Price Index, also known as inflation. That's going to come out as 07:30 a.m. Core CPI, which excludes food and energy. And then you've got raw CPI. We've got crude oil inventory. We've got gasoline inventory. We've got a 10-year note auction that's going to happen tomorrow at noon. Huge day tomorrow. The bond market could go in any direction based on the data that comes out tomorrow. And then Thursday, we've got PPI, that's going to be the leading inflation numbers, the input cost, the producer price index, as opposed to CPI, which is the consumer price index. And then Friday, more inflation data, import, export pricing, really important week. And then you've got a lot of commodity data that's going to be released. In addition to this week, we also have next week, because next week we've got a lot of manufacturing data, we've got retail sales, we've got housing. A lot of housing information is going to come out on Wednesday, December 18th. And then on Thursday, we've got more inflation data. We've got PCE, personal consumption expenditure, and also GDP, gross domestic product. What is the health of our economy as a nation? We've got some new home sales and then more inflation data on Friday. Core PCE pricing, inflation expectation, personal income, personal spending. So the next 2 weeks, really critical when it comes to rates, when it comes to the bond market. Let's take a look at what is happening with the bond market right now. Let me adjust the screen a little bit so that you can see the entire thing. And you can see over the past 5 days, overall, we've had really positive movement within the bond market. December 4th, it shot up, but we made all that gain and it just kept on going down. We ended the week on a positive note. That's why rates went down to the 6.5% conventional 30-year fixed. We went up a little bit today. We got really close to a repricing line. Thankfully, we're seeing a little bit of a backtrack right there. But this is going to be a huge week, and it's really going to be a winner take all week. Let me go back to what's happening today and what's happening this week. Lock and float. That's all I can say, which is what we've been saying now for 2 years. Lock and float, lock and float. That's all we care about. We're at 6.5% right now. Not bad. That's going to be good. And anything within that 6 to 7%, this is going to be the forever rate apart from Fed intervention. This is it. This is the market rate for loans. So 6.5%, not bad at all. If we have really positive inflation numbers, job numbers, GDP numbers, if things are really positive, we could very well see a 25 basis point drop, get down to the 6.25. Your client now has the ability to relock the rates. But what if these numbers come in hotter than expected? What if inflation, PCE numbers, labor cost, manufacturing cost, import-export pricing, what if all of that comes in hotter than expected? Well, then we're going to see a reversal. We could very well go back to the 6.75 into the 6.875. I doubt that it's just going to stay neutral. It's going to be very volatile. We started the day very volatile. Take a look already. Up, kept on going up. Now we're noticing down. It's continuing to go down. We're only up by 2.9 basis points on the 10-year Treasury. Hopefully this will continue. But we don't have a repricing line until 4.121. We're at 4.894. Let me go ahead and change this to a line chart, go back 6 months, and we have to go all the way back to October-ish when we were under that 4.1. That's when we saw really nice, attractive rates. So we could very well see a repeat of this over the next few weeks, or we could see, let me go back a little bit more instead of 6 months, let's go back 1 year. Is it allowing me to go 1 year? Oh, looks like I have to refresh. Let me refresh this really quick. So we've got 6 months. Let's go back a year. We could very well see a repeat of this, or we could see a repeat of this. That's what could happen. One or the other. It's going to be a very volatile next 2 weeks. Best strategy for your client will absolutely be the lock and float. Let's take a look at inventory, see what's happening with inventory across the entire Austin area. We had a drop in inventory. A lot of that is going to be seasonal. Let me go ahead and just download this so you can see the entire screen. And it's going to be a lot easier for you to see everything. So just give me 1 second so we can download this and see the entire screen. And let's go ahead and open up the entire PDF so it's easy for you to see. As of this morning, we have 12,646 active listings currently on the market. That's going to be a drop of 66 from Friday. That's going to be a weekly drop of 159 and a monthly drop of 1,164. 8.43% less inventory today compared to the same day last month. 13% higher inventory today compared to exactly the same day last year. 3,782 pending. Slight increase compared to Friday, but we are up 6.3% compared to last year. So really exciting to see this number. We are officially on 23.0 activity index, 4.46 months of inventory. New construction activity index at 30%, 30.09. resale at 19.45. I want to see this resale up to 20%. I believe that we're going to get there at 20% activity index, pending divided by active plus pending on the resale side of things. Here we've got the active listings. We've got 13% more listings. This is going to be that gap right here. Last year, we had 11,190 active listings on the market. This year, 12,646. Number of pending listings. We have beaten last year going all the way back to the end of October. We had a slight moment between the end of September and the beginning of October where we were beating last year. We lost a little bit of ground, but since the middle of October, we have been up, which is really encouraging because for the entire year, all the way to the end of September, we were losing ground. We had more pending properties last year compared to this year. We saw that reversal, and now it looks like that reversal is sustained. Better market this year, fourth quarter of this year compared to last year. Do not be surprised when your client finds that property that had that $25,000, $35,000, $40,000 price drop and it's been in the market for 30, 40 days. You contact a listing agent. You're having the conversation with your client about how it's a neutral market, or maybe that zip code is a buyer's market. We can come in aggressive and assertive. And you do just that. You come in aggressive. Maybe you come in another 5, 7.5% under the final list price. And that listing agent calls you and says, hey, we just got another offer, or we just went under contract on another offer. Don't be surprised with that. As a matter of fact, I had and let me see if this agent is here. I don't think this agent is here. So I'm not going to share any details on this specific transaction, but I'll just give you the context. Actually had a buyer call me, of course, found my information, which is totally fine. My information is all over the place. But had a buyer call me and say, hey, like, what's going on? I submitted a verbal offer on one of your listings. One of your agents has a property on the market, and I submitted an offer. And the agent said, okay, great. I'll present it to the seller. And last thing I know, like I don't hear back. And I heard the property's under contract. And I'm like, okay, well, let me just get some information. Well, this person submits an offer that is like a 40% lower than the list price, 40% lower. And we went under contract on an offer that was like, I want to say maybe like 7% lower. And when the seller receives this verbal offer, might I add, verbal offer, it's still an offer, we still present it. The seller's like, oh, the heck with them. I mean, you're like, okay, well, we have to tell you this person contacted us. They want to come in at this price and they want to close at this timeline. And the seller's like, forget that person. Let's just go take this other contract. I'm very comfortable with this contract. And we can't discuss with that buyer what the property went under contract for. We don't know if the deal is going to fall. We're just going to obviously play it safe. The seller doesn't want us to disclose anything. Of course, we can't disclose anything unless the seller gives us written instruction to disclose it, and they don't want to disclose it. But here you have a situation where this buyer saw over the past year and a half, multiple properties within that pocket, that area, just sit there and languish and not go under contract. Median days on the market, 75 to 80. Amazing price drops. We list our property. It's priced right. The marketing is great. And within 10 days, we get a really good offer that the seller's really happy with. Now, that buyer is not thinking about today's market. They don't have access to these leading market indicators. They're looking at the lagging market indicators. They're looking at the property that sold for 60 cents on the dollar 3-4 months ago. Well, that market now is gone. We've got more pendings right now than we did last year. We've got a really nice recovery market right now. And that buyer was outraged and kind of had to talk him off the ledge. He's like, well, I can't believe you guys didn't call me back and give me a chance to resubmit. I would have gone higher. And I said, well, what's the highest that you would have gone? Like, if you had the opportunity, if we could go back in time and you had the opportunity to submit your highest and best, what would that be? And he gave me the number, and I'm like, yeah, you still wouldn't have won. Just so you know, you still wouldn't have won. He's like, what? That's crazy. Like, I saw properties going for way cheaper. I said, well, yeah, that was yesterday's market. Things have improved, things are changing, and a different buyer sees that, and a different buyer knows that. And by the way, you might want to get an agent, right? Because the buyer was just trying to do it themselves. So, and of course, that buyer is reading the headlines and they're seeing the data, but the data is the lagging indicator, right? Here's a buyer that's stuck in traffic, bumper to bumper, but there's an accident that was just cleared. You ever been to traffic that you go from 0 miles an hour to like 75 and you're like, what the heck happened? Like, nothing happened. I don't see any cars. I don't see any wrecks. Well, you know what? That wreck got cleared. So you don't see that wreck. And now you're going 80 miles an hour. That's the feel that we're getting in certain pockets for certain listings, is that we're going from 0 to all of a sudden, like, I just got offers on this, like 3 days on the market, really good offer. That area, that pocket went from a just stagnant market to all of a sudden a demand market overnight. Now, please know that this is not happening across the entire broader market, right? Real estate is what? Hyper local. That is what's happening. That's what's happening. Sonia said, I'm hoping for that. Offers are coming in low. Yeah, buyers, especially in certain areas. I keep on saying real estate's going to be hyper local. There are areas where buyers do have the ability to come in super aggressive. There are areas where the activity index is under 15%, months of inventory, over 6 months of inventory, still with price drops. And buyers, they can do whatever they want within that area. So real estate's always going to be hyper local. Don't take your experience from your listing appointment at 9 a.m. and apply it to your listing appointment or your buyer consultation at 4 p.m. if it's a completely different market. Oftentimes we have to be a Jekyll and Hyde in real estate. You meet with a buyer in the morning and you're like, oh yeah, we can come in at, 85 cents to the dollar. We can come in at 15% drop and we can negotiate everything. We can negotiate closing costs, you name it. And then you meet another buyer at 2 p.m. and you're like, well, yeah, you can't negotiate a darn thing on this property. It's desirable, it's amazing, it's fresh, and it's in a good area. Let's take a look at activity index. We can see this at the activity index at exactly 23%. The activity index has been going up since the last week of August, which is really encouraging. Looks like demand bottomed out towards the last week of August. And since then, we've had a better than expected activity. Last year, demand bottomed out November at 22.79. So we are now higher than the bottom of last year. Not by much, but what I am encouraged, even though the activity index this year is less compared to last year, the gap is shrinking. I'm interested in trends, and you can see that the gap is now really tight, really increasing. And from last year to this year, we had overall a really big gap between demand last year and this year. And then look at this. Now it's shrinking, and we're just going to wait and see what happens here over the next few months. Personally, I'm excited. I'm encouraged. I'm very bullish for 2025. I see the demand there. And more importantly, I see the really amazing foundation that you all continue to lay in your marketing, your engagement, what you're doing with your clients. I'm super proud of you all, super proud of the team. Months of inventory last year, 3.91. Keep in mind, this is a leading market or a lagging market indicator, a 3 to 6 month lagging market indicator. As the activity index goes, so will months of inventory. It's just going to take time, but very similar to the activity index. What are we looking at here? A very wide gap. that is shrinking over time. And we're now a difference of only 14.1%. We do have 14.1% more inventory this year than we did last year. Of course, inventory peaked on Monday, July 15th at 15,503. We are down 2,857. Some of this, of course, is going to be seasonal. We can see that from October all the way to December, inventory drops. October, December, inventory drops. This time around, it was July, a slower drop. Let's go ahead and just keep the line static, a slower drop. So inventory is decreasing at a slower pace. But the big unknown, and I'm so looking forward to January, February, is that we did see an increase in the number of withdrawn and expired listings. We've had quite a few listings withdraw and expire. To be exact, we have had so far this year. Oh, wow. Oh, no, I included the sold. I was like, oh, that's shocking. 13,849 listings withdraw and expire so far this year. How many of those are going to relist January, February? We did see this past year inventory just skyrocket. Now, the baseline here was under 10,000. You see how this line is flatlining a little bit? And when did it start flatlining? Towards the middle of December, towards the end of December. What happens if this line flatlines exactly like last year and we see another increase? All right. So now we could cross that 15,000 active listing mark. Let's take a look. So, and let's forget December because December's not over. When you look, so write down this number, 13,412. Let me grab the notepad and we're going to go 14,412. Oh, 13,412. 13,412. That's going to be this year. This year. And let's take a look at last year. And all we're going to do is take a look all the way through November and look at the difference. 11,561. Last year, January through November, last year. Let me make this a little bit bigger for you all to see. We're going to go edit. We're going to go font. We're going to change it from 12 to 36. So last year, 11,561, January through the entire month of November. This year, 13,412. That's almost 2,000 more. That's pretty significant. That's pretty significant. Almost 2,000 more. That's going to be 15 to 18% more withdrawn and expired this year compared to last year. That's pretty significant. And the other thing that we have is that we have a lower demand on properties that are for lease. So how many of those properties, lease prices going down? So how many of those properties that leased out last year, those leases are coming up for renewal, and now that landlord's like, all right, let's just go ahead and sell it. We are noticing more of that. It's going to be a very telling January and February. We're going to learn and we're going to know really early on how inventory is going to be this year compared to last year. The reason I say that is take a look at February of 2023. I'm going to draw a few things on the screen so that your eyeballs can focus there. New listings, February 2023, 2829. New listings, February 2024, 4,079. If February 2025, we come in at 3,000 listings, I'll be the first one to tell you that don't worry about it. Inventory is going to stay flat. We're not going to see this explosion of inventory. Market's going to continue to stabilize. But if new listings come in at over 4,000. If we beat last year number of new listings by February, then I will be the first one to tell you, watch out. Watch out, you all. Inventory is about to explode. And we will know that by February because we have a very early selling cycle. What it does is that it continues into March, April, May, and you can see, look at 2023. We've got March 4479 of 2023, March 2024 4963. Look at April 5363 last year compared to 2 years ago 4167. And then 5441 compared to 4616. So this year, we just had an explosion of new listings hit the market between January and May. And what happened with prices? It just hit a wall. What happened with inventory? Reached a record high. So we will know by February. And then, of course, it's going to get confirmed by May. So I am cautiously optimistic. I would say 30% cautious and 70% optimistic. Last year, it was more of a 50-50. This year, it's certainly more optimistic than cautious. But we're going to have to wait until February to see how many of those withdrawn, expired, release, rebounds are going to come back on the market. We're going to know by February. Any other questions, you all? Let's take a look at a few more things. If you have any questions, feel free to unmute yourself, write it down over chat. We only have 12 minutes left. Out of the 12,646 active listings on the market, 54.7% of those have had a price drop. Good to see this number under 50%. Another positive indicator. Let's go ahead and focus on market cycle really quick. And let me scroll down. Let's go ahead and click on market cycle. Let me make this a little bit bigger. I'm going to download this as a PDF so that you can see the entire thing. It's just going to take a few seconds to get this information up on the screen. I have not updated the December data quite yet. It's only December 9th. I'm going to wait until, when are the weekly stats due this time around? Let's take a look at the weekly stats. What day is going to be, what's going to be Friday? I don't even have a calendar in front of me. Let me get my phone. Friday is going to be the, let's pull this bad boy up here. Friday is going to be, today is the 9th. So Friday is going to be the 13th. Ooh, Friday the 13th. I may have the December data on Friday just so that we can see how December is playing out. Yeah, I'll go ahead and do that. So when we publish this information and we review the data on Friday for the Friday team meeting, I'll say by Thursday, because Thursday we're going to do our weekly. I will have the information for Thursday. So Thursday's data will include all of December. But let's take a look at what's happened for the month of November. On numbers sold, we had a drop of 12.2% month over month. Totally fine, very much seasonal. Year over year, a 3.2% increase on the month of November. And we're going to see an increase for December. I had no doubt that we're going to see an increase for the month of December. On the pricing thing, average sold price, we did see a reversal on the average sold price, now negative 1,677. But when you look at it year over year, a significant and meaningful jump of $18,000. And that's going to be the largest increase that we've had going all the way back to early 2022 when the market was appreciating. February 2024, year over year, we had an increase of 14,645. Of course, that was evaporated by what we experienced May through October. But year over year, we are up 18,377, 3.4% increase. On the median sold price, we're up by $10, $430. Year over year, we're up by $10,000. Now, even with this increase, we are still down 18.49% on the average sold price. On the median sold price, we are down by exactly $120,000 from the market peak. We're at $550,000. That's when it peaked May 2022. We're at $430,000. When you compare the median sold price to 3 years ago, let's do the 3-year first, we are down 8.32%. This is going to bottom out when we are comparing May of 2022 to May of 2025. That's when this is going to bottom out. That's when it's going to bottom out, when we are comparing May to May, because the market peaked May 2022. So this line is going to continue to go down until it bottoms out when we compare May, and then we're going to start seeing a slow but gradual recovery. When you look at it, 24 months, you already see that slow and gradual recovery. But when you look at it because we already hit the bottom, because we were comparing May 2022 to what? May 2024. That's when it bottomed out right there. And now when you look at it 24 months, we start seeing a pretty nice, sharp, and pronounced recovery on the 24-month comparison. If today is the absolute bottom of the market will return peak value when we use the 25-year compound appreciation of 4.994%. We're looking at a return to peak of February 2030. Do you notice how that keeps on getting pushed? Remember when it was May 2029? And now it's February 2030? It just keeps getting pushed. That's because we're experiencing a slower than historical appreciation. So every month that the data is less, it recalculates the compound appreciation. If you go back a few months, the compound appreciation was 5.1%. Now it's 4.994%. So with that slowdown in the compound appreciation, you delay your gain for a few more months. So it would take 61 months for it to return to peak value. Let's take a look at the annual sold data. So far, when you average every single thing that has sold in the entire 6-county area, the average sold price is $566,324. That's going to be a drop of $2,786. On the median side of things, the median sold price from January all the way through today, because I pulled this data really early this morning, the median sold price is $439,639. So we are down $8,838 compared to the median sold price of 2023. And to put this in perspective, which is really amazing, last year we had a $51,000 drop. So the 8,838 is almost 4 times higher than 2009. So our recovery year of 2024, and we're certainly experiencing a fourth quarter recovery. The big question is, will it sustain itself into 2025? But no one can deny that we are experiencing a fourth quarter recovery. The data proves it. Even the sold to list price ratio is improving. That is getting tighter. But the recovery year is 4 times worse than the worst year prior. Of course, eliminating 2023, which was an absolute catastrophe. But this is very telling. This is real. I sure hope that this recovery is indeed sustained. So where would I put the market right now? At a solid correction. So we are no longer within the crash risk area. So that is, we just parked that. That's like, all right, well, we just don't see any data right now. When you look at the leading indicator, which is the new listing to pending ratio, that is not under zero point 0.6. That has made a really nice recovery from April all the way to now. The new listing to pending ratio continues to recover. The danger for a market crash was right here, where you had the drop from peak going down, and here you've got the leading. Let's remind ourselves that we've got the leading indicator going down, which meant what? That the lagging indicator was also going to go down. And what do we see? The lagging indicator going down. And then we've got the leading indicator going up. And what are we starting to notice? The lagging indicator starting to go up. So when the leading indicator is continuing to go up, it's going to drag the lagging indicator up. And you will not have a market crash unless both of these lines are inside this red box. You just can't call it a crash, because what's happening is that the leading indicator is just preventing the market from crashing because demand is improving. And that's what the orange line represents. It represents an improvement in demand. And when demand goes up, well, then prices stabilize and then prices start to recover. That's why there are these phases of a real estate downturn. You've got a market pullback. Well, that was us in 2023. Then you had a market correction, and the pullback lasted all the way to mid 2023. We started a pullback. It peaked May 2022. By October 2022, it's like, all right, we're in a pullback. Prices are already down more than 5%. It happened that fast. And then we stayed within a pullback until mid 2023. And then it's like, oh, we're in a correction now. We're now over 10% price drop. And we stay within it. And how long is a correction? Correction is 1 to 2 years. Well, we're still in a correction. So then we approached the crash. We just danced with the devil. We approached a market crash because for a few months, we teetered on the edge of that 0.6 new listing to pending ratio. And what that shows us is that, okay, not only are prices going down, but demand continues to erode, but it has to erode over a sustained period of time. And how do we define sustained? Well, it's got to be under 0.6 for a few months. I'd say 2 to 3 months, it has to be under 0.6. Well, it never stayed there for 2 to 3 months. And that's why we got away from the crash. And now we're solid in correction. We are in a severe real estate correction with a improvement in demand. So we're hopefully being pulled out of a correction. But what's the recovery on a correction? Well, the recovery on a correction, well, let me make it simple. It's double however long it took to reach the bottom. The recovery is double whatever it took to reach the bottom. So if it takes us 24 months to reach the bottom, it takes us 48 months to recover. If it takes us 36, it takes us 72. If it takes us 50, it takes 100. So it's going to be double the duration. All right, the recovery is double the duration. So that's where we are right now. We're in a severe, sustained real estate correction with really positive leading indicators pulling us out of it. That's where we are. Will it crash? Well, what factors will lead to the Austin market going back into a moderate to high risk of a crash? National dynamics. What happens if the entire market across the nation goes south? It'll pull back Austin a little bit, but the fact that we've already experienced so much of this is good news for us. So it's not going to pull us down another 20%. Mark my words, that'll never happen. Prices are not going to go down another 20%. Any buyer that thinks that the Austin market is going to go down another 20% is just insane. The data just does not show that. Because then it gets to the point where it's so affordable that people move in. And if people move in, the new listing to pending increases. And if that increases, demand increases. And if demand increases, prices stabilize, go up, which kind of what's happening right now. So I don't see us being anywhere near anymore. We got really close to that high risk right here. That's where we got close. So the danger zone was early this year. And that coincides with what? The listings exploding. That is why February 2025 is going to be so critical. We could very well be having a conversation. We're like, oh my gosh, we're at 18,000 listings. We just had an explosion of inventory hit the market. A few other reasons why I don't see that happening is that builders did a really good job adjusting to the Austin market. So we saw a decrease in the number of single family permits and on multifamily permits. So inventory is going down simply because builders pulled back. So every indicator that I see really puts us at a recovering real estate correction. Austin went back to being more affordable than other cities nationally. That increased after we did. Bingo, spot on. That is exactly it, which is great news for us, you all. Great news for us. I mean, we've been at this for a very long time. You all have done an absolutely amazing, exceptional job. I could not be more proud of you all. And I've got other friends that are agents in other states, other cities. They're like freaking out right now. And like, man, like, how are you guys? I'm like, man, I'm living the dream now. You should have talked to me back in, 2023. Like right now, I'm super positive. I'm just stoked. So it's really interesting to see what's happening here. Yo, it is 11:02. I want to honor your time. I know y'all have a ton to do just to be in touch with your clients, but I do want to remind you all just, show up to our Tuesday mentorship meeting. It is fantastic. It's super valuable. Just really good feedback from every agent that joins. So make time, join our mentorship meeting. We do not record it. Melanie just did an endorsement. The mentorship meeting is amazing. So thank you, Melanie. Thank you for the endorsement. So just really fantastic. I absolutely love our mentorship meeting. It is absolutely great. It's incredible. I love it. So be sure to join us for that tomorrow, 10 a.m. I want to get to the point where so many people are coming to the mentorship meeting that we actually have to use the big room. So far, we're using the small room, but I really want to get to the point where we're actually using the big room. So really join us for that. It's really just fantastic. I absolutely love our mentorship meeting. And then we've got our contract review. If you did not do the contract proficiency for this week, please do the contract proficiency. Super important for you just to be on the up and up when it comes to the contract. Also want to remind you that the Texas Real Estate or the Texas Association of Realtors, along with all the vendors, they are looking to make all the updated forms live in the next 5 days. That is their goal. Next 5 days, all of the forms are going to be live. That's where we're going to start doing the practice contracts using the new form. Paragraph 12A1B is going to be where we negotiate commission. You've got the T47.1 declaration as opposed to the affidavit. So there's going to be a lot going on over the next few weeks to prepare us for next year. And we're going to start doing the contract proficiency on the new forms. And then, of course, we have the Friday meeting. And then Christy Munoz, our office manager and also our event coordinator. See, I don't plan parties. I just do not ever count on me to plan parties. I'm not the party person. It ain't going to happen. So that is Christy. So if you have any questions about anything related to what she is planning, that don't talk to me. That's 100% her. That is her. But on the 20th, we've got a really awesome get together. I really look forward to it. It's just an absolute blast. Really, really exciting get together. And I'm going to end the meeting with this picture. The kiddo finally enjoyed her first ever slice of Chicago deep dish. And look at that face. Look at that cheese pull. And I love the endorsement. Yeah, she took her first bite and she just wide-eyed. And she said, I think I like this better than Domino's. I'm going to put that on their review. I'm going to 5-star Giovanni's. I'm going to say, you know what? My daughter said, I think I like this better than Domino's. So there you have it. Really, this picture was taken last night at 7 p.m., y'all. I didn't get in until 3 a.m. So, but it is good to be back. That's the update for all of this week. If you have any questions, comments, concerns, criticisms, or complaints, please let me know. Here to help. Look forward to seeing you tomorrow for the mentorship meeting. Also look forward to seeing you over Zoom for our Wednesday, and then, of course, live in person on Friday. Have an absolutely amazing, excellent rest of your day, and I will talk to you all soon.